This is Bloomberg Daybreak Middle East. Our top stories this morning.
Stocks soar after the U.S. and China strike a trade truce at the G20. How long can the rally last?
Crude also surging as Riyadh and Moscow agree to extend the deal to manage markets. Canada's largest oil-producing province orders unprecedented output curbs.
More pressure on May. UK politicians demand the Prime Minister publish the government's internal legal advice underpinning her Brexit deal.
And Emmanuel Macron faces the biggest crisis of his presidency as violence continues to flare in France. What now for his reform plans? It's just gone 8 a.m. across the Emirates. This is Bloomberg Daybreak Middle East. I'm Manus Granny in Dubai.
And I'm Tracy Alloway in Hong Kong. Well, Manus, viewers might want to turn to the humble soybean to gauge the impact of the trade truce announced over the weekend at the G20 meeting. We have soybean futures up about 3% in early morning trading today after the U.S. said that China had agreed to immediately start importing U.S. agricultural products. Interestingly, China itself made no mention in its statement about agriculture. So we need to start asking whether or not the market is getting ahead of itself. That seed of skepticism, man, is feeding into our Markets Live question of the day, which is, how long will the trade truce rally actually last?
Your inner skeptic is jumping out there, Tracy. Let's take it on to oil, because this is one market which is underloved, underowned. Positioning in the Brent and the crude market is the lowest in 5 years. We are bid, we are strong. Russia and OPEC agreeing to extend their collaboration to manage the market. That's a driver. The second driver is, of course, Al-Mazroui saying he's optimistic we will get a cut in Vienna when we head to Vienna a little bit later on the week. One breaking news headline for you. This is a red headline coming in across the Bloomberg terminal. Trump and China have agreed to reduce and remove import tariffs on cars. So this is a big new fresh line from this Sino-US dinner on Saturday night, where an extension, this hiatus of 90 days on potential upping the tariffs on $200 billion worth of goods. Trump says China has agreed to reduce and remove car import duties. So we'll keep an eye on the auto sector when that opens. As I say, the oil markets are strong, they're underloved and underowned. Tracy.
Right. We're all about commodities this morning, man, as well. Speaking of commodities, let's get straight over to the market action with Juliet Sawley in Singapore and Agam Vakil in Mumbai. Juliet, what's the latest?
A very broad-based rally today, Tracy, as you've been mentioning, across all asset classes, but equities here in Asia having their best day in about a month. The MSCI Asia Pacific Index up by almost 2%. But watch what happens when China and Hong Kong reopen after that news that Manus just broke there on the auto industry. You said it's all about commodities. It's not just soybeans, also cotton, corn rising. You can see cotton futures there for May delivery up by 2.6%. The Aussie dollar very much a proxy when it comes to these trade relationships. It's having its best day in about a month, its highest level since August 21st. The Kiwi, meanwhile, at a 5-month peak as risk appetite returns. But according to a lot of analysts, how long will this last? That is our quote of the day, of course. And Stephen Innes from Rwanda has just sent a note out saying the worm is already turning and that the US dollar is creeping a little bit higher against the offshore renminbi. The offshore renminbi still up by 0.5%. But he says markets are continuing to price in more stimulus from the PBOC, and the net effect of the 90-day trade war moratorium could weigh negatively on China's trade surplus. But still, at least today, Manus, everything looking very strong across these equity markets and other assets.
Yeah, I think Avery sort of said he'd eat his hat if this really was a substantial change. Let's take it to India. Agam, good morning to you. This week is a big week again for India. We get the RBI. We've just opened. We're on the bid in EM. How does it look to you?
Well, it's certainly looking good. Good morning, Manus, to you as well. We are looking at the Nifty as well as the Sensex trending higher. Both these indices are advancing for the sixth straight day. The Sensex are, clocking gains of around 0.25%. The Sensex also nearly 0.5%. The Nifty Banking Index is also making marginal gains. We must remember that foreign portfolio investors are putting about $1.7 billion in Indian capital markets. That's the highest that we've seen in the month of November and highest that we've seen in 10 months. The Indian rupee, however, is weakening to a certain extent, trending lower by 0.5% as against the US dollar, currently at around 69.97. So if, say, for the Indian rupee, we're seeing strength in Indian equities right now.
Yep, a sea of green this morning. All right, Juliet Sally and Agam Vakil, thank you so much for that. Let's check in now on the First Word headlines from around the world. Here's Deborah Mao.
Tracy, Theresa May is facing a vote to bring down her government should the House of Commons reject her Brexit deal next week. Labour says it's inevitable that the party will propose a no-confidence motion should May lose the debate on December 11th. That would put the UK on course for an early general election, with the EU saying the only options are the deal on the table or cancelling Brexit altogether. The EU is turning up the heat on Italy, demanding the populist government lower its budget deficit target from the stated 2.4% to below 2%. La Repubblica says Brussels wants spending cuts of at least $5 billion to avert potential sanctions for breaching EU budget rules. The Italian parliament will debate the proposed budget on Wednesday. President Emmanuel Macron held an emergency cabinet meeting after more than 400 people were arrested in Paris as clashes with police continued for a third straight weekend. Dubbed the Yellow Vest movement, what began as a protest over fuel taxes has grown into general anger at high living costs. There was also violence outside Lyon and in Toulouse, Nantes, and in the Ardennes region. Israeli Prime Minister Benjamin Netanyahu is facing new corruption accusations, with police recommending he stand trial for alleged bribery in a third case. Investigators say they have more evidence that he traded influence for favors, something the Prime Minister denies. The decision to indict lies with the Israeli Attorney General, who still hasn't ruled on two other corruption cases against Netanyahu. And SpaceX intends to go ahead with its 18th launch of the year later Monday, having postponed liftoff at the weekend. It's not clear what forced the delay, which was announced by a tweet just before midnight Saturday. The launch aims to put 3 small satellites into orbit on a mission to scan the globe for pirates targeting shipping. Global news 24 hours a day, on air and at TikTok, on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Deborah Mao. This is Bloomberg. Tracy.
Thanks so much, Deborah. Well, markets have been moving strongly to the upside after the trade truce struck between the U.S. and China at the G20 meeting. Presidents Trump and Xi agreed to pause the introduction of new tariffs and intensify their talks. Bloomberg's Eric Schatzker has all the details from Buenos Aires.
It's no exaggeration to say expectations were extremely high heading into this meeting here in Argentina. And while leaders of the world's top 20 economies weren't able to agree on many issues, they did succeed in diffusing some of the tensions that lately have clouded the outlook for the global economy and for financial markets. Here are 3 key takeaways. The big one, of course, a truce in the U.S.-China trade war. Also, a victory for Donald Trump on issues ranging from climate change to multilateralism. And thirdly, a bullish sign for oil after Russia and Saudi Arabia agreed to extend their deal on production cuts. Now for a few details. The U.S. gave China 90 days to show progress on reforming its trade practices, and in exchange will hold off on raising tariffs on Chinese imports. Those new tariffs were due to take effect on January the 1st. The White House called the dinner between President Trump and President Xi, quote-unquote, highly successful, and China said it had prevented more economic friction. Now we wait to see where China is prepared to make concessions. Trump scored a win over his G20 counterparts on the so-called communique or closing statement, with language that protects or advances his administration's policies on protectionism, energy security, and the WTO. And finally, in another meeting on the sidelines that overshadowed the main event, Russian President Vladimir Putin and Saudi Crown Prince Mohammed bin Salman agreed to continue managing oil supplies. That paves the way for OPEC to cut production at its December 6th meeting in Vienna. Don't read too much into the smiles you'll see in the photo ops or talk of consensus. This was a difficult meeting, and deep divisions remain. Eric Schatzker, Bloomberg, Buenos Aires.
That was Eric Schatzker for us in Buenos Aires. We are still getting headlines post the meeting coming across on the Bloomberg. We have Donald Trump tweeting that China has agreed to reduce and remove tariffs on cars coming into China from the U.S. Currently, the tariff is something like 40%. We should just note here that China has already cut its main tariff figure on passenger car imports from 25% to 15% earlier in the year. The 40% being discussed here is the punitive tariff that's actually targeting U.S. cars only. Well, on that note, let's bring in Gareth Nicholson. He is head of fixed income discretionary portfolio management over at Bank of Singapore. Gareth, it's so lovely to see you this morning. I suppose we should, of course, start with the outcome of the G20 meeting, the trade truce, as we're calling it. Is the relief rally justified at this point?
We think so. I mean, we're actually calling it a ceasefire than a truce, but sentiment has been so bad for the last few months, as you know, and I think that's kind of accentuated with the way that, you know, the first question is how long is this going to last? No one believes it's actually going to happen, and that just indicates that even with all this positive news, and we really feel there has been some positive change. You've got the ceasefire, so there's going to be now time, at least 90 days, to negotiate more deals. As you just highlighted, Tracy, China seemed pretty keen to work and to find a solution, or at least to cater some of the needs of Donald Trump. They're not going to bend over, but they're definitely going to look to help where they can. At the same time, this has also taken a bit of the real heat away from, is the US really keen on kind of a Cold War, kind of economic Cold War friction, or is the focus back on economy? And we feel the focus is back on the economy. You've had talk with, the Fed kind of reducing some of the noise there. So we think this is positive. For the medium term, it's good news.
Gareth, just how concerned are you about data? We'll spend more time about the Fed, but I looked at the global economy. This is on MLive this morning. The Philly Semiconductor Index and also Korean exports to China dropping quite aggressively and certainly fading away. Is there this desynchronized threat to the global economy?
Well, I think that one thing that President Trump has brought in is that it's not going to be the same for the next few years with regards to international trade agreements, how things are done. I think the protectionist agenda is still very much there. I think, as you highlighted, the G20 talks are still very tense. And the ceasefire just gives us some breathing room, which the markets really need. So in the medium term, short to medium term, we feel this is constructive, but the longer term, there's still a lot of questions to be asked. And as you highlight, some of the indicators that are maybe slightly longer term are still pointing that frictions need to be cleared up. But at least we have 90 days of peace, at least trade peace, and we can see how it flows from there.
Right. So on that 90-day note, Gareth, how are you actually going to trade the next 90 days? Is now the time to be taking on risk positions?
Well, our view is going into this year, last year was fantastic. 2016 was even stronger. This year has been a year of consolidation. Cash has been king. You need to stay nimble but active. So for us, yes, this is a time to look to add risk. For instance, in the fixed income space, we like country-specific risks, even regional bases and definitely geographical. Buying the broad basket, you're diluting yourself with too many good risks and bad risks, and we think you want to be more idiosyncratic, concentrate on the good risks. You don't need to chase the really high-yielding names, the frontier stuff. That was a trade for the last few years where, rates were low, leverage was cheap, volatility was low because of the QE. You just aim for return. Now it's about risk return. Now it's about finding, a balanced return. Double B bonds are offering a good 7%, and that's a good return for a decent amount of risk, and we think that's a way to play it.
I'm curious to see how much China bond exposure you want to take. We're running the MLive story this morning. China's mainland corporate bond set for the best performance in 3 years with an 8% gain. I look at some of the data in China. It's in the GTV library, and this is really beginning to roll over, isn't it? We're looking at money supply on the way down the blue line. We're looking at the overall aggregate financing, but these bond markets are in for a pretty good turn, aren't they?
Yeah, I agree with you. I think China has obviously been a very popular place to kind of, for the US to kind of bash. And the world economy has got on top of that, particularly in the bond market and the equity market. But within the bond market, a lot of the bond market is driven by stimulus measures that the Chinese government can help with. For instance, a moderating of the housing policies that we've seen been very strict over the last few years. Infrastructure spending is likely to increase next year. Corporate tax cuts that increase growth. There's a number of factors that we still feel China is likely to help stimulate and taking off this noise with the trade disputes and given some time for further negotiation to be done, we see this being positive. And China is one of those standout opportunities at the moment, given fundamentals are okay, valuation is attractive, and sentiment is turning.
Gareth Nicholson there, thank you very much. You stay with us. We've got a little bit more to dig into on the fixed income space. Still ahead, crude climbs as Russia and Saudi Arabia agree to extend their cooperation. We'll have the very latest on the oil market.
Yep, but up next, Jay Powell propelled U.S. equities to their best week since 2011 with his speech last week. Will he have as dramatic an effect when he gives testimony to Congress on Wednesday? This is Bloomberg.
US stocks enjoyed their best week since 2011 last week. They were boosted in no small part by comments from Fed Chair Jerome Powell that the market took as being dovish. However, Goldman Sachs, JP Morgan, they're sticking to the forecast that the Federal Reserve will raise interest rates 4 times next year. Congressional Joint Economic Committee on Wednesday. And we get the latest non-farm payrolls data on Friday. It's going to be a blockbuster week. Gareth Nicholson is the head of fixed income and discretionary portfolio management over at Bank of Singapore. We're back on home ground here, fixed income. Want to get your sense, we're going to speak to Clarita a little bit later on. We'll hear from Powell later in the week. This is a chart in the GTV library. This is the economic surprises in the United States of America. We are at the lowest reading in a year. If the Fed needed justification, the data is beginning to help Jay Powell, isn't it?
Oh, for sure. And I think this is big news for the bond market and FX as well. I think the Fed has been pretty smart in the sense that they were maybe painting themselves into a corner, with a rigid approach to, we're raising rates. This is the trajectory we're going at. We're following the dots, and nothing's really going to get in the way. And I think that the recent message is a little bit more open to the fact that they're going to be more data dependent, and particularly if data starts turning, maybe we won't have such an aggressive rate hike. You've already seen the 3% and the 10 years dropping. Sorry, the 10 years dropping below 3%, which illustrates that maybe the market is reviewing the neutral rate, the terminal funds rate, and revisiting. Maybe it might need to be lower with regards to where that's going. So I think this is a bit of a pause. The dovish stance is giving the market a bit of food for thought that they're not just going to run away and potentially make another Fed error that we've seen in the past without listening to where the market's going and combining everything from the strong employment data that's come out of recent to also some of the other numbers which are coming up maybe a bit softer.
Gareth, you mentioned the magic word there, which is, of course, dots, the Fed's dot plot. You can pull that up on the dots function on your Bloomberg there. I guess I'm wondering, just to take the other side of this argument, is there a possibility that the market has gone too far in betting that the 2019 dots aren't going to be realized here? Well,
I suppose historically the dots have never been realized. I think that is the facts. Our base case is similar to what you're talking about. Some of the other big houses, JP Morgan and Goldman Sachs, will 4 rate hikes still next year, but very much data dependent. We need to see how this plays through, and I think the key with the dots is going to be at each meeting, seeing how the numbers come through. For instance, you've got payrolls coming this week. It's probably going to be softer than last one. The last one was phenomenal. As you said, economic surprises down. There's a few data points which are showing a slight weakness, and we think the Fed has kind of given themselves a bit of a credibility in case they decide to move away from the dots, to maybe be a bit slower if the data does change. So we think this is a positive move from the Fed, giving themselves flexibility in this changing market.
Well, of course, Gareth, they're going to have a news conference after each of the decisions. So this is going to be an opportunity in terms of forward guidance. I suppose his hallmark, Powell's hallmark of forward guidance. Let's talk about the curve. Let's talk about your market and where we are. Looking at 5-year paper this morning, we're looking at a rise in yield, 2.88% for 5-year government bonds. Looking at 3.5s, you're only a dot away from inversion. This is probably the closest curve that's closest to inversion. Will inversion be averted 2019?
Oh, tough question. I think first thing we need to talk about inversion is it a fantastic indicator for recession? Because that's what most people are looking at the curve for on a broader level. And whilst it's been accurate, the lag from when the curve gets inverted to when there's actually a recession has varied massively. And some of the numbers between them have been very large. So we think by itself, inverted curve is not the best predictor of recession. Saying that, will we see the curve invert? I think it's likely. I think what we've seen, particularly, we look at the 2s10s, which is a similar sort of picture. We've seen some flattening, but not that much. I think what the market's taking from this move is that, yes, the back end's moved down, but so is the front end. It's kind of been in parallel. So it's saying to us that the overall market view hasn't changed that much. I think I read over 80% of fund managers believe that early 2020 will be the kind of real downturn for at least some of the bigger markets. We've had 10 years of expansionary period, and that has to come to an end. And inversion is a signal of that. How long will the gap be before we get there? If we see an inverted curve this year, we still could have some time before we get that downturn. And our base case is, the curve is going to remain flat, so maybe get a bit flatter from here. We don't think you're getting paid for long-term duration, but as an indicator for the economy, there's numerous signals you've got to look at, and an inverted curve by itself is not the best.
Yeah, amazing to see market participants really coalesce around that 2020 mark. All right, Gareth Nicholson, Head of Fixed Income Discretionary Portfolio Management at Bank of Singapore. Thank you so much for that. I should just mention here that Fed Vice Chair Richard Clarida will be speaking exclusively to Bloomberg later today. That will be at 3:30 p.m. Dubai time. But before then, could Standard Chartered be about to shed jobs in Dubai? This is Bloomberg. Well, let's get you a quick check at the latest business flash headlines. Here's Deborah Mao.
Tracy, UBS has stolen a lead on rivals in China, becoming the first securities firm to get approval to take control of a local joint venture. The Swiss bank wants to buy a further 26% of UBS securities to take its interest to 51%. CEO Sergio Ermotti told Bloomberg it underlines a long-term commitment to China. Competitors including JP Morgan and Nomura are also seeking control of joint ventures. The White House says China would consider approving Qualcomm's $44 billion bid for NXP if it is presented again. The U.S. team says it's part of a wider agreement struck by Presidents Xi and Trump in Buenos Aires. Qualcomm scrapped its bid for NXP in July after an almost 2-year wait for approval. Chinese regulators declined to clear the deal, though Beijing later expressed regret over the collapse. Standard Chartered is said to be cutting jobs in Singapore, Dubai, and other key markets as part of a drive to reduce costs. Sources say as many as 100 positions could be involved in Dubai alone, including some senior roles. CEO Bill Winters has launched a campaign to reignite growth at Standard Chartered, including plans to simplify the bank's structure, lower operating costs, and free up liquidity. And that's your Bloomberg Business Flash.
Deborah, thank you very much. The latest headline has reignited the risk-on momentum in these markets from Mr. Trump in a tweet that China has agreed to reduce and remove car and import duties. You've seen Asian stocks rally up 2%. Oil is bid as Russia and OPEC agree to extend their relationship. Yuan is stronger and S&P futures are on the march. This is Bloomberg. It's destination ground zero for a trade war. If you want to trade currencies, this is where you go. Look at the Aussie dollar. It's Sydney. It's just gone 3:30 in the afternoon. What a beautiful, beautiful day. What a beautiful spike in the Aussie dollar. You're seeing the highest levels since August of this year. If you believe there is a durable, substantive truce in negotiations between China and the United States on trade, this currency is just off its 2-year lows. This is the alpha of trade wars. Let's check in on your first word headlines from around the world. Deborah Maz standing by.
Manus President Trump says China has agreed to remove tariffs on cars imported from the United States as part of the two-way pledge to halt any new trade measures for 90 days. Washington had been set to raise duties on $200 billion of imports from January 1st, with the White House debating whether to tax all goods from China. Trump now says Beijing's agreed to reduce and remove tariffs from the current 40%.
I look very much forward to the discussion, and I'm sure discussions after, but the relationship is very special, the relationship that I have with President Xi, and I think that is going to be a very primary reason why we'll probably ending up getting something that will be good for China and good for the United States.
Theresa May is facing a vote to bring down her government should the House of Commons reject her Brexit deal next week. Labour says it's inevitable that the party will propose a no-confidence motion should May lose a debate on December 11th. That would put the UK on course for an early general election, with the EU saying the only options are the deal on the table or cancelling Brexit altogether. France's President Macron has held an emergency cabinet meeting after more than 400 people were arrested in Paris as clashes with police continued for a third straight weekend. Dubbed the Yellow Vest Movement, what began as a protest over fuel taxes has grown into general anger at higher living costs. There was also violence outside Lyon and in Toulouse, Nantes, and in the Ardennes region. SpaceX intends to go ahead with its 18th launch of the year later Monday, having postponed liftoff at the weekend. It's not clear what forced the delay, which was announced by a tweet just before midnight Saturday. The launch aims to put 3 small satellites into orbit on a mission to scan the globe for pirates targeting shipping. Global news 24 hours a day, on air and at TikTok, on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Deborah Mao. This is Bloomberg. Get over to Juliet Sally now for a look at the markets. Jules.
Deborah, December generally tends to be a good one for investors, but we've also got Presidents Trump and Xi to thank for this very broad-based rally we're seeing across Asian equities this Monday, up by about 2% on the MSCI Asia Pacific Index, holding at its highest level since October 10. You can see markets right across the region are gaining, specifically, I should say, a lot of positive movement coming through in these EMs. Have a look at Thailand, have a look at the Philippines, Australia getting close to the close there, up by 1.7% in Sydney. It's not just equities, we're also seeing commodities rise across the board. We've been talking about soybeans, about corn, cotton. Have a look at aluminium in Shanghai, up by 1.5%. You can see cotton up by over 3%. And then we've seen this huge rally coming through in Brent and WTI oil as well. Brent now up by almost 5% at $62 a barrel. We are seeing that commodities gain really move across from the dollar. Bloomberg Intelligence saying that commodities are really ripe to take this bull market. And I also want to show you what we're seeing in terms of the car automakers, I should say, because we had that tweet at the top of the hour from President Trump. Not a lot of details, but essentially saying that China has agreed to reduce and remove car imports. We'll see that reflected in the US session, no doubt. But have a look at Subaru and Mazda in Tokyo. And then on the lunch break, Brilliance, China and Geely Auto, both very strong. So they could actually see some more positive momentum coming through in the afternoon session as well, Tracy.
Yep, and it's not just equities and commodities and now cars, but also Asian currencies that seem to be getting a boost from the reprieve in this trade spat. What kind of gains are we seeing?
Well, of course, we've been talking about the Aussie up by about 0.9%, very much a proxy for the relationship between the US and China. But when you look at Asian currencies in particular, the South Korean won, the front runner today, it is at a 2-month high. You've seen a lot of movement coming through across these EM currencies. The renminbi also firmer by 0.6%, although we have had a couple of notes saying that you could start to see that pair back somewhat. But the yuan and Aussie certainly very strong performers. When you look at the Indian rupee, though, it is actually getting hit today falling from a 3-month high, down by 0.6% against the dollar. We had that economic data missing in India, also crude oil prices gaining, and the RBI about to start their 3-day policy meeting today. So that is one currency under pressure, but broadly speaking, it is a story of a weak dollar and strong Asian currencies today. Manus.
Thank you very much, Julia. Let's talk about one of those commodities on the march. It's oil. It's surging on the back of Saudi Arabia and Russia extending their deal to manage the market into next year. The two countries have yet to officially confirm new oil curbs, but President Putin said they'd reached agreement. And the Canadian province of Alberta has this morning taken an unprecedented step of ordering its oil producers to cut production. Let's get more from our Asia energy editor, Aaron Clark. He joins Tracy and I now from our Tokyo studio. So some pretty big pieces of news to digest. Let's start first of all between Putin and the G20. What exactly did he say at the G20 that has so emboldened markets this morning?
Yeah, I think that's the biggest bit of news. Russian President Vladimir Putin met with Saudi Crown Prince Mohammed bin Salman over the weekend at the G20 summit and basically on the sidelines. And they agreed to extend this agreement to manage the oil market. Now, this is really the same group, OPEC plus Russia, who we saw implement cuts of about 1.8 million barrels a day starting from January of 2017. Those cuts lasted about 18 months, and they really cleared this global oil glut. They contributed to a rebound in prices. Brent was over $80 a barrel in October, near a 4-year high. So, they've done this before, and it really helped sort of stabilize prices, at least from a producer perspective. And it seems like they're going to continue that agreement going forward. Oil prices, in the meantime, of course, have fallen over the last month or so, but they rebounded this morning. Both Brent and WTI are up about 5% today.
Right. So, Aaron, we do have an OPEC meeting coming up in Vienna. Manus Crownie, he's going to be going. He's packing his sweaters right now, I'm sure. What does this mean for that meeting? Are they going to be able to agree on a wider production cut agreement yet again?
Yeah, clearly the production cuts are going to be the primary topic of discussion. An OPEC advisory group has recommended that the group cut production by 1.3 million barrels a day. But the ministers don't always, go for what the advisory group recommends. So we'll just have to see, if they do cut production and by how much. But the advisory group has recommended 1.3 million barrels a day of cuts.
The other big piece of news, I find this quite impressive. Alberta, they've ordered a cut for the first time since the 1980s in Canada. Does this suggest a much bigger crisis, or is it idiosyncratic? They're trying to close the gap between the price of Canadian crude and US crude, which has collapsed by 60%. In terms of oversupply, what does this do?
Yeah, I think it's not really a crisis, but it does show how these Canadian producers are really suffering. They sell their oil, their heavy oil, at a discount to the benchmarks like WTI and Brent. So they've been hit a lot harder than other producers that are selling more quality grades. This is what we're seeing is a coordinated effort by the government to sort of coordinate these cuts. And spread out the pain among producers in sort of an equitable manner. So I think that's what it shows. From time to time, these producers do cut back on their production to try to impact prices, try to boost prices. But this is just sort of a coordinated effort by the government. We'll have to see, how much prices react when they start in January. I think they're going to cut about 325,000 barrels a day of production. That's about 8.7% of the province's crude production.
All right, Bloomberg's Asia energy editor Aaron Clark there. Thanks so much for that. WTI still up more than 5% this morning, by the way. Pretty amazing moves there. Well, let's stay in Tokyo because French President Emmanuel Macron has said he's committed to the Renault-Nissan alliance despite the arrest of Carlos Ghosn. He discussed the issue with Japanese Prime Minister Shinzo Abe on the sidelines of the G20 meeting in Argentina. Our chief North Asia correspondent Stephen Engel is following all the drama for us. Steve, what's the latest?
Well, the latest is the government's getting involved a little bit, of course, on the sidelines of the G20 in Argentina, as you mentioned. Shinzo Abe, the Japanese prime minister, meeting with Emmanuel Macron. And Macron, not surprisingly, said he'd like to see the continuance and the stability of the alliance, which, of course, the French government owns a 15% stake, a very significant stake in Renault, which then owns a sizable 43% stake in Nissan. While Macron, of course, has a vested interest here, Renault employs about 50,000 workers. They don't want to see a deterioration of a partnership which many claim really benefits Renault more than it does Nissan. Meanwhile, Shinzo Abe, for his part, said this is something that needs to be resolved going forward by the companies, not necessarily the government, but the governments. But it's an interesting time, obviously, right now, given that Carlos Ghosn still is sitting here in a Tokyo detention center, still has not been charged, and it's been quite some time since November 19th, when he was first arrested here.
Well, it's not just he who's in prison, it's he and one of his trusted advisors. Any progress in terms of the legal fate? Will that be extended, Stephen? That seems to be the base case assumption at this juncture.
Yeah, that's right. There's several options for prosecutors, and that is they've already gotten another extension of the detention, basically a detention warrant approved on Friday by a Tokyo court that could do it keep him in prison or jail for another 10 days, which would be 7 days from today. So we're talking December 10th. But we're also hearing, as prosecutors are building their case against both Ghosn and Greg Kelly, the former representative director, who's also been, implicated here, prosecutors could arrest them again on other charges, and that would allow prosecutors to, apply for an even further detention. So it's really shed a lot of light on the Japanese legal system, which has a 99% conviction rate. But right now, even in the Japanese newspapers, this is a full-page article examining the Japanese legal system and whether it actually gives, the defendant a fighting chance to defend themselves.
Right. Stephen, this is exactly what I wanted to ask you because, of course, you're on the ground for us in Tokyo. I'll be joining you in that city tomorrow, I believe. But what are you seeing in terms of the local media reaction? How are the Japanese people actually discussing what is one of the biggest corporate stories to come out, at least this year?
Yeah, well, the media has been very interesting. There's been a lot of different scoops from whether it's the Kyoto News or the Nihon Keizai Shimbun, Asahi, Mainichi, a number of different scoops. And that's what we're getting. Most of our news is coming from leaks from within the prosecutor's office to these local papers. And the latest one is that apparently, according to Kyoto News as well as Japan Times, Carlos Ghosn is refusing to sign any confession, or what he is allegedly saying, a false confession. And that is where a lot of the prosecutors get that 99% conviction rate. They beat the defendant down through interrogation without their lawyers and oftentimes get confessions. But according to local media, Carlos Ghosn is standing fast, claiming his innocence.
All right, our chief North Asia correspondent Stephen Engel there for us in Tokyo. Well, we do have some breaking news crossing the Bloomberg once again. Qualcomm saying that the deadline for the NXP deal is past. The deal is terminated. It's making those comments in an emailed statement to Bloomberg. Of course, that is after the story that she said he was open to blessing Qualcomm NXP if it was presented yet again. Qualcomm saying definitively that the deal is dead. Manus.
Yeah, Tracy, up next we're going to talk a little bit more about deals. This time, SoftBank's telco unit IPO will make history in Japan as it debuts without a price range. We'll have more on the detail from Tokyo. This is Bloomberg.
it's 1:46 p.m. in Tokyo. We have the Nikkei up 1.4% this morning off the back of that big relief rally in risk assets post the G20 meeting and the agreement of a trade truce between China and the U.S. The Nikkei 225, by the way, beating Japan's Topix index by the most in 20 years. A pretty abnormal move, I got to say there. Well, let's check in on the Indian markets now with Bloomberg Quint's Niraj Shah. He's in Mumbai. Niraj.
Hi, good morning. Well, maybe not as great as the other Asian markets are. Now, two ways to look at it. Either the Indian markets have had a bit of a rally leading up to the event, which we did, or the fact that crude rises and that puts a bit of a spanner or a bit of a lid on the gains today. So still trading about 0.5% higher, but that's the extent of the gains. The real chart to monitor, and there are two charts to monitor today. One, the fall in the currency because of the rise in crude prices. We are back to below 70 to the dollar. Remember the whole of last week we've been talking about how the currency's been gaining strength. We almost nudged 69.5 on the upside, but back to sub 70 today for the currency. So that is one key thing to monitor. And then, of course, the strength in private banks keeping the markets excited. So the Nifty Bank, the third index on your screen today, which is trading about 0.5% higher because of the strength in the private banks, which have a higher weightage on the index as well. So yes, in the green, but because of the crude prices, a bit of a tempered optimism, I would say. And the currency, certainly the eye of all traders right now.
All right, Niraj Shah in Mumbai, thanks so much for that. Let's get a quick check of the latest business flash headlines now. Here's Deborah Mao.
Tracy, Deutsche Bank boss Christian Saving says he doesn't expect to be personally targeted in a money laundering inquiry in Germany. Police raided Deutsche's Frankfurt HQ and several other offices last week. The investigation touches the private wealth unit overseen by Saving before he became CEO. But he told Bild am Sonntag that the bank conducted its own inquiry and considered the matter closed. Dissident shareholders at Takeda Pharmaceutical are to hold a news conference later in a final attempt to convince investors to abandon the $60 billion takeover of London-listed Shire. The Sunday Times says a group of Takeda family members and shareholders want to derail what would be the biggest ever international takeover by a Japanese company. Investors will be asked to approve the deal on Wednesday. And Vietnam Airlines is reported to be pushing ahead with plans for an IPO in the new year. The Financial Times says the carrier aims to offer shares on the Ho Chi Minh City Stock Exchange in the first quarter, although the final decision on listing will be made by the government in Hanoi. The report advances a plan that originally saw Vietnam Air aiming to come to market by the middle of 2019. And that's your Bloomberg Business Flash. Tracy.
Thanks for that, Deborah. Well, SoftBank is to make history with the $21 billion IPO of its wireless unit, set to be the first to debut in Tokyo without a price range. Bloomberg tech reporter Pavel Alpayev covers SoftBank and joins us now. Pavel, what does it actually mean, or what does it say about this IPO that SoftBank was able to list the unit without a price range?
Well, it's certainly being read as a sign of tremendous confidence, not just by SoftBank, but also by their underwriters, that they can move the allotted number of shares at that specific price. Now, it is fairly unprecedented. We're not able to find any other instances of companies listing without a price range. And there might be one other reason is SoftBank is heavily marketing this issuance to individual investors, the mom and pops here in Japan. And one reason might be is that people who are less experienced with the IPO process might be spooked by the announced price changing, whether upwards or downwards. And so it's fairly reasonable to expect that when SoftBank on December 10th announces the final price, it will also remain at 1,500 yen. Of course, the listing itself is on December 19th.
Right. So is that confidence actually justified? Because we have seen some headwinds really facing Japan's telecommunications industry.
Well, it's still a tremendously profitable business, but there are a couple of sort of troubling developments for SoftBank ahead. The most immediate one is probably the government's pressure to lower rates. Cabinet officers have publicly stated that the Japanese phone bills are too expensive and they could be cut by as much as 40%. And we already have seen that Docomo is willing to comply, while KDDI and SoftBank kind of remain on the fence. A slightly longer term, there's a potential of a lot more competition in the market. E-commerce giant Rakuten will be joining as the fourth carrier in Japan in 2019, and there's all the reasons to expect that the way they will enter the market is with a price war. So throughout the industry, it's possible that the profits will come under pressure ahead.
All right, Pavel Alpayev in Tokyo there for us. Thanks so much for that. Well, coming up, Bloomberg size and scope. Today's number is $2.5 trillion. Find out why next. This is Bloomberg. Well, it's time now for Bloomberg Size and Scope. Every day we break down one superlative from our coverage, and today's number is $2.5 trillion. Here to explain why is Bloomberg's global markets editor, Adam Haig. He joins us now from Sydney. Adam, walk us through the number. It's a big one.
It is a big one, Tracy, and it's the amount of value that we've seen wiped off European equity market value in 2018. So it's a huge number, and as we kind of digest what's going on today and we see this big relief rally that's taking all markets globally in its stride this morning, I think it's a very important one to look at. So we're down about 14% in US dollar terms for the Stocks Europe 600 index in 2018. And one thing that has done is obviously dragged valuations down quite significantly. So we're now trading at a forward price earnings multiple of about 13.8 on the European index. So clearly there are going to be some incremental risk takers who want to add a little bit of European equity exposure, given that the fundamentals are starting to change. I mean, if we just think about some of the big changes in the last few weeks, firstly, we had the movement from the Fed to a more dovish outlook. Recently, over the weekend, we've had a little bit of a tilt away from some of the worries in the trade war to maybe perhaps a scenario that's a little bit more conducive to taking risk next year. And also, we've had the declines in the oil price stabilize somewhat and kind of take away some of those worries around how much of an impact it might be to deflation on the downside. So I think all that really kind of sets up a very interesting position for European equities now, given the magnitude of the decline that we've seen, such a huge drop in value in 2018. It's pretty much the biggest year in terms of wipe up of value since we've, going back 7 years really to 2011.
Right. So, Adam, how much of the losses in European stocks will they be able to actually claw back by year end? And the reason I ask that is because if you look at U.S. equities, we only need another 7% to get to the street's consensus figure for the S&P 500 by the end of the year. We might get 2% today off the back of that risk rally. Is it going to be the same story for the European market?
Well, potentially, but of course, there's a number of other factors kind of weighing on the outlook for European stocks. Of course, economic growth kind of being one of those. But to your point, I mean, the rally we're seeing today is changing that complexion of just how much of a bad year we're going to see for risk assets across the board, but for European stocks in particular. FTSE 100 futures very strong this morning. We're likely to see that filter through to the other large markets in France and Germany and the like as well. So perhaps that gap could be closed a little bit as we kind of get a bit more of a December rally. And as I tried to say, those fundamentals really have changed quite significantly in the last few weeks, which means that if you are in the camp that valuations are starting to look attractive again, that could see a bit of buying return and that pushing up prices going into year end.
All right.
Thank you very much, Adam, putting that all in context for us there, Adam Haig, with the very latest on the demolition that took place in Europe and the markets. Let's just check in on those markets, because the question you need to ask yourself is this. How long will this sugar rush last? I'm talking about the 90-day hiatus, Tracy, between the US and China. And of course, the latest, I suppose, injection is that Trump says that China will reduce and remove car import tariffs. Stocks are bid. Oil is up over 5%, the biggest move in nearly 2 years on that, as Saudi Arabia and Russia agree to extend the management of the market. Tracy.
Yep, and the yuan also moving this morning against the U.S. dollar. There is a school of thought that says a less hawkish monetary policy stance from the U.S. actually gives China a little bit more room to inject stimulus. You also have S&P 500 futures up 1.7%. We'll have more Daybreak Middle East coming up next.
This is Bloomberg Daybreak Middle East. Our top stories this morning. Stocks soar after the US and China strike a trade truce at the G20. President Trump says Beijing will remove tariffs on cars imported from America. Crude also surging as Riyadh and Moscow agree to extend the deal to manage markets. Canada's largest oil-producing province orders unprecedented output curbs. And more pressure on May. UK politicians demand the Prime Minister publish the government's internal legal advice underpinning her Brexit deal. And Emmanuel Macron faces the biggest crisis of his presidency as violence continues to flare in France. What now for his reform plans? It's just gone 9 a.m. across the Emirates. This is Bloomberg Daybreak Middle East. Welcome to the show. I'm Manis Granny in Dubai. Just when you thought the exuberance couldn't get any more exciting after dinner in Argentina, Trump came out with his tweet and bang, we moved. The equity markets are on the march higher. This is your MSCI Asia Pacific. The latest tweet from Trump is that China will reduce and remove tariffs on cars, autos imported from the United States of America, building on the overall overarching theme of relief for markets. You are seeing these equity markets react, undoing some of the losses that we've seen for the year. Question of the day, join in. The MLive team are standing by. This is what we're asking you this morning to join the conversation. How long will the trade truce rally last? Of course, 90 days is the hiatus period of time during which more negotiations will take place. There will be many bumps, humps and lumps and volatility between now and then. In terms of GMM, how's the global market looking? This is also the oil market, up over 5%, the biggest move in nearly 2.5 years. That is reflected very clearly on GMM. You've got emerging market relief. It's almost audible in the emerging markets. Let's pop out those EM currencies. Mexican peso, South African rand, the Aussie dollar. The Aussie dollar, some say, is ground zero, of course, for trade war relief. But you are seeing the peso up as these emerging markets have really a double punch, don't they? A softer Fed, potentially a reconciliation in trade. Of course, Mexico, their November inflation data will come through on Friday. So there are a number of things that could drive the market. But the peso and the commodity currencies are absolutely stoked this morning. Let's get to Deborah Mao. She has your first word headlines.
Manis, Theresa May is facing a vote to bring down her government should the House of Commons reject her Brexit deal next week. Labour says it's inevitable that the party will propose a no-confidence motion should May lose the debate on December 11th. Now, that would put the UK on course for an early general election, with the EU saying the only options are the deal on the table or cancelling Brexit altogether. The EU is turning up the heat on Italy, demanding the populist government lower its budget deficit target from the stated 2.4% to below 2%. La Repubblica says Brussels wants spending cuts of at least $5 billion to avert potential sanctions for breaching EU budget rules. The Italian parliament will debate the proposed budget on Wednesday. France's President Macron has held an emergency cabinet meeting after more than 400 people were arrested in Paris as clashes with police continued for a third straight weekend. Dubbed the Yellow Vest movement, what began as a protest over fuel taxes has grown into general anger at higher living costs. There was also violence outside Lyon and in Toulouse, Nantes, and in the Ardennes region. Israeli Prime Minister Benjamin Netanyahu is facing new corruption accusations, with police recommending he stand trial for alleged bribery in a third case. Investigators say they have more evidence that he traded influence for favors, something the Prime Minister denies. The decision to indict lies with the Israeli Attorney General, who still hasn't ruled on two other corruption cases against Netanyahu. SpaceX intends to go ahead with its 18th launch of the year later on Monday, having postponed liftoff over the weekend. It's not clear what forced the delay, which was announced by a tweet just before midnight on Saturday. The launch aims to put 3 small satellites into orbit on a mission to scan the globe for pirates targeting shipping. Global news 24 hours a day, on air and at TikTok, on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Deborah Mao. This is Bloomberg Manis.
Thank you very much, Deborah. And markets are moving, as we've been saying, strongly to the upside after a trade truce struck between the US and China at the G20 meeting. Presidents Trump and Xi agreed to pause the introduction of new tariffs and intensify their talks. Bloomberg's Eric Schatzker has all the details from Buenos Aires.
It's no exaggeration to say expectations were extremely high heading into this meeting here in Argentina. And while leaders of the world's top 20 economies weren't able to agree on many issues, they did succeed in diffusing some of the tensions that lately have clouded the outlook for the global economy and for financial markets. Here are three key takeaways. The big one, of course, a truce in the U.S.-China trade war. Also, a victory for Donald Trump on issues ranging from climate change to multilateralism. And thirdly, a bullish sign for oil after Russia and Saudi Arabia agreed to extend their deal on production cuts. Now for a few details. The U.S. gave China 90 days to show progress on reforming its trade practices, and in exchange will hold off on raising tariffs on Chinese imports. Those new tariffs were due to take effect on January the 1st. The White House called the dinner between President Trump and President Xi, quote unquote, highly successful, and China said it had prevented more economic friction. Now we wait to see where China is prepared to make concessions. Trump scored a win over his G20 counterparts on the so-called communique or closing statement with language that protects or advances his administration's policies on protectionism, energy security, and the WTO. And finally, in another meeting on the sidelines that overshadowed the main event, Russian President Vladimir Putin and Saudi Crown Prince Mohammed bin Salman agreed to continue managing oil supplies. That paves the way for OPEC to cut production at its December 6th meeting in Vienna. Don't read too much into the smiles you'll see in the photo ops or talk of consensus. This was a difficult meeting, and deep divisions remain. Eric Schatzker, Bloomberg, Buenos Aires.
Let's bring in our guest host. We have Mark Franklin, Senior Portfolio Manager for Conning Asia Pacific. The Trump tweet that I suppose added to the momentum over the past 24 hours and in the past hour is this. China has agreed to reduce and remove tariffs on cars coming into China from the US. That's 40% at the moment. So if we didn't have sort of a sugar rush in the first instance, Mark, it's certainly been added to this morning. Let's ask you the question of the day. How long will the trade truce rally last? Question one, take it away.
It's a great question, Manus. And what I would say is we need to basically sequence what the events are coming up over the next few weeks. We've got the OPEC meeting later this week. Hopefully that'll put a floor under the correction in crude oil prices that we've seen. We've then got the ECB meeting where they are due to confirm full tapering of the QE program from January of next year, and then the Fed meeting at the end of this month. If all three of those events come in line with market expectations, then there is a distinct possibility that markets can continue to rally for a few more weeks through to the year end at the very least. The reality is that markets often undershoot on the downside as well as overshoot on the upside. And by that I mean the fundamentals and the global growth outlook continue to deteriorate actually, but that doesn't necessarily mean that markets can't rally upwards for a few more weeks in spite of that.
Now, I suppose, as you say, if we take things to go as per expected, perhaps a softer Fed, one more hike, and perhaps a little bit of a softer intonation in the ECB, etc. The question markets are going to ask, especially emerging markets, is whether this is an excruciating top for the dollar. How do you look at the dollar given the momentum that you've seen in EM currencies this morning?
This is one of the most important questions that we've got to answer at the moment. And what I would say is actually that the outlook for the dollar and certainly the near to medium term is broadly balanced, in fact. So whilst we expect that US growth will continue to moderate from a very, very high base over coming quarters, we still think that the US economy will grow above trend for the period of time beyond where we are now. At the same time, we've actually got tightening US dollar liquidity into year end. You've seen LIBOR OIS spreads continue to spike over the last couple of weeks. We've got repatriation flows back into the US dollar that continue from the corporate perspective. So near term, there are reasons why the dollar can actually hold reasonably firm. But clearly, when you have a broader-based risk on, that tends to coincide with a weakening dollar. So at the same time, you've also got a big supply increase of dollars over the coming quarters, again, because of the widening fiscal deficit. as a result of tax reform. So we would say that, generally speaking, I think directionally the dollar should moderate over the next 1 to 2 years. But there are reasons why it can hold pretty firm at these levels for the time being.
OK, so if the dollar holds firm, let's just take it forward. I've put this into the GTV library. This is MSCI emerging markets. Our clients can pick this up. I mean, we're seeing money flow in to emerging market ETFs for the first time in quite a while. So we've had the first positive month since July in emerging markets. A firm dollar, a more benevolent rhetoric from the Fed. Does that mean take more EM on the book in terms of equity, FX or bond?
I think you have to be quite selective. There's still a wide disparity between different emerging market economies and markets within the broader global emerging markets complex. So you have to be very selective still. You want to be focused on those economies which are continuing to run current account surpluses, where central banks have a high degree of credibility because they've created two-way policy flexibility. And you want to avoid those markets where policy and regulatory risk is becoming increasingly elevated and the cost of capital is on the rise.
Look, we really have got a whole new adrenaline rush because of the dinner, because of the Trump tweet this morning. However, let's just go back behind the veil. We popped this into the library as well. This is the reality. This is the Philadelphia Semiconductor Index. These are the exports from South Korea to China. The data is not constructive and, if anything, is looking worse. How big a risk is trade and self-interest in 2019 to the portfolios?
It's a huge risk, Manus. As I said earlier, actually the fundamentals continue to deteriorate, and I actually think that global growth revisions are going to continue to be negative for many, many more months. But again, that doesn't stop markets in the very near term from continuing to rally a bit further from here. And actually, the weakness in the data is not necessarily trade-related. It's actually a function of a sharp slowdown in the pace of money and credit growth globally, in particular emerging markets as well. And that has led to a sharp slowdown in terms of order increases from end customers. And we saw a big inventory build, for example, in the US economy in the third quarter. That may need to be unwound over the coming couple of quarters because actually end markets are slightly softer than corporates have anticipated.
Well, we'll talk about that data flow in the United States very shortly. Mark, you stay with me. Mark Franklin, Senior Portfolio Manager at Conning Asia Pacific. This is what we've got stacked in ahead for you. Crude climbs as Russia and Saudi Arabia agree to extend their cooperation. We have the latest. Up next, though, Jay Powell propelled U.S. equities to the best week since 2011 with his speech last week. Will he have the same dramatic effect when he gives testimony to Congress on Wednesday? We debate right here on Bloomberg. Let's get you a quick snapshot of our Middle East markets and how they finished yesterday. And all the victory went to the Tadawul, up 1.8%. Upbeat third quarter earnings. Saudi company for hardware and Yanbu National Petrochemical were the two big ones there. You saw Dubai down by 0.4%. Sorry, that's Qatar, excuse me, down by 0.4%. Of course, Dubai was closed for National Day. Egypt down by 1.25%. Global Telecom demolition down by over 10%. And taking it to Israel, corporate leading indicators rising by 3.3%. Although you are just seeing a slightly stronger Israeli market. What will the IPO market hold in Israel in 2019? That's the perennial question. Those are your markets. By the way, it's still vacation day. The hangover of National Day is evident in this office. Let's take a quick check on your business flash headlines. Here's Deborah Ma.
Manus, UBS has stolen a lead on rivals in China, becoming the first securities firm to get approval to take control of a local joint venture. The Swiss bank wants to buy a further 26% of UBS securities to take its interest to 51%. CEO Sergio Armati told Bloomberg it underlines a long-term commitment to China. Competitors, including JP Morgan and Nomura, are also seeking control of joint ventures. The White House says China would consider approving Qualcomm's $44 billion bid for NXP if it is presented again. The U.S. team says it's part of a wider agreement struck by Presidents Xi and Trump in Buenos Aires. The bid for NXP was scrapped in July after Chinese regulators declined to clear the deal. Qualcomm now tells Bloomberg that the deadline for a deal has passed and it has been, quote, terminated. Standard Chartered is said to be cutting jobs in Singapore, Dubai, and other key markets as part of a drive to reduce costs. Sources say as many as 100 positions could be involved in Dubai alone, including some senior roles. CEO Bill Winters has launched a campaign to reignite growth at Standard Chartered, including plans to simplify the bank's structure, lower operating costs, and free up liquidity. And that's your Bloomberg Business Flash. Manis.
Deborah, thank you very much. Now, U.S. stocks literally were on fire last week. They had their best week since 2011. They were boosted in no small part by the comments from the Fed Chair, Jerome Powell, that the market took as being dovish. However, Goldman Sachs, JP Morgan, they are sticking to their forecast that the Federal Reserve will raise interest rates 4 times next year. Powell testifies to Congress at the Joint Economic Committee on Wednesday. And we get the latest non-farm payroll data on Friday. We also get an interview with with Clarita a little bit later on today. My guest host is Mark Franklin. He's a senior portfolio manager at Conning Asia Pacific. So Powell did for markets, which was spectacular. He shifted the gears. The question to you is simple. My guest yesterday said we are at the neutral rate, 2.5% more or less, are we, if the deck hike is a shoo-in?
I think that you're probably going to get another interest rate increase at the December meeting this year, possibly in the first quarter of next year. But beyond that, the jury does very much remain out in terms of the Fed's ability to continue to raise rates beyond that, because I think that the growth data and also the inflation data will moderate from this point onwards. And that will muddy the waters for the Fed in terms of their ability with conviction and confidence to raise rates beyond the next couple of meetings.
In terms of the bond market, we're seeing yields rise ever so slightly this morning. We're back up, I would say, in the traditional trading zone, 3.05 up to, 3 to 320. So we see there's a little bit of a rise in yields. Do we retest the 320 level on bond yields, very simply on the 10s?
It's always possible that for a very, very short period of time, rates move out to certain points that they've tested in the past. But if you think that the growth and the inflation picture on the medium-term, longer-term horizon continues to moderate, then it's hard to anticipate that those levels will hold, because ultimately people will start to rotate back again into slightly more defensive exposures beyond the current risk rally that we're seeing right now.
Wages is going to be the most critically important aspect, I would say, when we look at the data on Friday. The data, rather than parsing the differences of opinion. Deutsche Bank would be the view that wages are the most critically important issue, that if they rise and the Fed fails to act, you have the potential for a 1970s style US market. Unanchored inflation, long rates up, profits down and equities under profit. Do you see any possibility of an inertia from the Fed that causes a risk of letting the 1970s style period exist?
But I think what you're going to see in the data is an ongoing firming of wage inflation in the US. And we're seeing that both from a bottom-up anecdotal perspective, but also from a top-down perspective in terms of the tightening of the labour market. But at the same time, consumer price inflation is likely to moderate somewhat, both reported and core, over the next few months. And so that combination doesn't necessarily replicate the 1970s-style stagflation scenario, but it does create a headwind for corporate profitability and peak corporate profit margins. So we think actually that the earnings growth and the earnings revisions outlook for the US equity market next year is very much in the balance and nowhere near as strong as it was at the beginning of 2018. For this very reason, you're going to see an inability for consumer price inflation, certainly initially, to keep pace with firming wage inflation. There are selective signs of price increases being taken in certain sectors, but generally speaking, because of certain structural factors, whether it's offline to online, whether it's the Amazon effect, whether it's technological advancements, they are keeping a lid on the consumer price increases that we're seeing in the real economy.
We saw a fairly amazing rally in the S&P 500 last week, up nearly 5%. If I look at the valuation on a PE basis for the S&P 500 is now at 19. That is the cheapest that it's been since 2016. If you take, let's say, the three issues at play, Mark. One, that they do a deal on energy and OPEC. Two, the Fed goes into a slightly more pause focus, and there is some kind of step forward in trade. That would do for S&P 500 what?
All of those outcomes would eventually allow risk premiums to start to fall again. And I think the reason why we saw this derating in the equity market in the US over the last few weeks was because of a rising risk and fear over policy error. Policy error from the Fed, policy error from the Trump administration in terms of its dealings with China. Now that both of those risks seem to be on the wane, it does allow the potential for risk premium to start to fall again, which as a consequence will allow PE multiples or valuation multiples to start to firm up and rise. So it's all a function of risk premium and the perceived risk of policy error in the face of what the realities are in the real economy.
It's amazing how we've shifted from policy error to stop the US expansion versus a policy error that may unleash unbounded inflation. Mark Franklin, Senior Portfolio Manager at Conning Asia Pacific. Thank you very much, sir. And the Fed Vice Chair, Richard Clarida, will speak exclusively to Bloomberg a little bit later today. What does the neutral rate mean to him? Are we there yet? That's at 3:30 p.m. Dubai time. Stay tuned for that. Coming up on the show, Emmanuel Macron tells Shinzo Abe he wants to keep the Renault-Nissan alliance intact. We have more on that story from Tokyo. This is Bloomberg. French President Emmanuel Macron says he's committed to the Renault-Nissan alliance despite the arrest of Carlos Ghosn. He discussed the issue with the Japanese Prime Minister Shinzo Abe on the sidelines of the G20 meeting in Argentina. Our chief North Asia correspondent, Stephen Engel, is following the drama. Steve, good to see you this morning. What is the latest on Carlos Ghosn's fate?
Yeah, well, the latest is, of course, the two leaders of France and Japan getting together and talking about this case. Of course, it's something that Shinzo Abe says it should be decided. The fate of the alliance should be decided between the companies, but the governments are getting involved. It was Emmanuel Macron, when he was the economy minister of France, that increased the French government stake in Renault to 15% before he became prime minister, much to the chagrin, of course, of the Japanese and Nissan, who say the alliance right now is an inequitable partnership. And Saikawa-san, the CEO of Nissan, would like to see that we're hearing. He'd like to see that revised. Of course, the French government owns a 15% stake in Renault, and Renault owns a controlling 43% stake in Nissan. I should say controlling because they have voting rights, where Nissan does not have voting rights with their 15% stake in Renault. It's very complicated, but again, Emmanuel Macron is saying he'd like to prioritize the continuance of this alliance, but he also wants to see more information from the prosecutors here in Tokyo, as Carlos Ghosn still sits in a detention center here in Tokyo since his November 19th arrest, along with former representative director of Nissan, that's Greg Kelly. And we're hearing from local media reports that Carlos Ghosn is refusing to sign any sort of confession to add to the prosecutor's case that they're building right now. And that extension of his detention was granted until at least next Monday, a week from now, December 10th. Carlos Ghosn could still be sitting in a Tokyo detention center without formally being charged.
OK, Stephen, thank you very much. Stephen Engel there with the very latest on the Renault-Nissan saga and Carlos Ghosn. Leave you with a quick snapshot of markets. The question for this, according to JP Morgan, is small rays of light, but on balance, they're cautious going ahead. It is tech that's driving the stock rally. And look at oil, up nearly 5%. We discuss. This is Bloomberg. It's a foggy midtown New York. Could be reflective, really, of trade over the next 90 days, trade negotiations. The dollar is softer. There has been a progress at dinner between China and the United States of America. No new raising of tariffs on the current bloc for 90 days. Second line this morning, tariffs being removed on autos from the United States of America into China. Building on that momentum of dinner at the G20. Is this the top of the dollar? EM is bid, dollar is offered. You are definitely seeing a risk-on mood in these markets. Can it last? That's the question of the day. Whole other issue. Deborah Mao has your first word headlines. Deborah, good day.
Dennis, good day. President Trump says China has agreed to remove tariffs on cars imported from the United States as part of the two-way pledge to halt any new trade measures for 90 days. Washington had been set to raise duties on $200 billion of imports from January the 1st, with the White House debating whether to tax all goods from China. Trump now says Beijing's agreed to reduce and remove tariffs from the current 40%. Theresa May is facing a vote to bring down her government should the House of Commons reject her Brexit deal next week. Labour says it's inevitable that the party will propose a no-confidence motion should May lose a debate on December 11th. Now, that would put the UK on course for an early general election, with the EU saying the only options now are the deal on the table or cancelling Brexit altogether. France's President Macron has held an emergency cabinet meeting after more than 400 people were arrested in Paris as clashes with police continued for a third straight weekend. Dubbed the Yellow Vest movement, what began as a protest over fuel taxes has grown into general anger at higher living costs. There was also violence outside Lyon and in Toulouse, Nantes, and in the Ardennes region. SpaceX intends to go ahead with its 18th launch of the year later Monday, having postponed liftoff over the weekend. It's not clear what forced the delay, which was announced by a tweet just before midnight on Saturday. The launch aims to put 3 small satellites into orbit on a mission to scan the globe for pirates targeting shipping. Global news 24 hours a day, on air and at TikTok, on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Deborah Mao. This is Bloomberg. Let's get over to Juliet Solly now for a look at the markets. Jules.
Deborah, well, after a positive November, we are seeing stocks start December on the right footing too, thanks to that trade truce, if you will, between Presidents Trump and Xi. You can see broad-based buying across all asset classes today. Australia's market closed higher by almost 2%. The MSCI Asia Pacific Index up by almost 2%. Its biggest gain in a month, and it's holding now at October 10 highs. October 10 this year, I should say. We are seeing great gains coming through from commodity markets as well. We've been talking about soybeans being a factor, but look at cotton for May delivery up by 2.6%. Aluminum in Shanghai also tracking higher. And of course, we've been talking about this big surge that you've seen in WTI and Brent crude, also on the back of the latest from Russia and Saudi Arabia. Let's quickly look at currencies as well, because dollar weakness coming through really helping a lot of these Asian currencies. The South Korean won is the best front runner, or the front runner, I should say, in Asian currencies at a 2-month high today. And the Aussie dollar, of course, a proxy, is firmer by around 0.8%. Also seeing weakness in bonds. So just essentially showing you, Manus, as we know, it is very risk on today.
Absolutely. How long can it last? Juliet, we know that the car makers are going to be in focus throughout the day following this morning's Trump on the auto tariffs. What are the other major movers? I was just looking through GR group rank returns, and it really is about information technology. But what stands out for you?
It's about IT, and it's also about those commodity players. If you look at the MRR function, you can see BlueScope Steel in Sydney is actually the front runner in the region, up by almost 12%. That's a big move for a stock in Sydney. But we're also watching Renesas Electronics, obviously still in the car space, but up by about 10%. The CEO was interviewed over the weekend and essentially said there's no reason for the company to lose in the autonomous driving space. So a very strong gain there. Let's have a look at the laggards, though, because particularly in India, the Indian market not doing as well as some of the other markets today. And you can see Sun Pharma there off by about 8%. That is the worst performer in the region. There is a report, though, that the insider trading case for that generic drug maker is going to be reopened. So part of the reason behind that fall. Line Corp in Japan also under pressure today. Manus.
Julia, thank you very much. To one of those markets that's on the move now. Oil surging on the back of Saudi Arabia and Russia extending their deal to manage the market into next year. The two countries have yet to officially confirm new oil curbs, but President Putin said they'd reached an agreement. And the Canadian province of Alberta has this morning taken an unprecedented step of ordering its oil producers to cut production. Let's get more with our Asia Energy editor, Aaron Clark, who joins us from Tokyo and our studio there. Aaron, good to see you this morning. What exactly did President Putin say at the G20?
Right. So Russian President Vladimir Putin met with Saudi Crown Prince Mohammed bin Salman on the sidelines of the G20 summit. And basically, they agreed to extend this agreement or this deal to manage the oil market. This is the same group, OPEC plus Russia, that implemented cuts of about 1.8 million barrels a day starting in January of 2017. Those cuts lasted about 18 months, and they really cleared a global glut of oil that helped oil prices recover. The recovery sort of culminated when Brent went above $80 a barrel in October of this year. Since then, of course, they've fallen quite a bit. But you've seen this group successfully implement production cuts before, and it's impacted prices and inventories. And it seems like they're going to continue, although they haven't given us any details about by how much they may cut so far.
Now, it's going to be -5. I'm going to be on a rooftop at 4 a.m. in the morning in Vienna, just for background information for viewers. Have sympathy. Is there any point in me going there in terms of, is it all over bar the shouting between 1 and 1.3 million barrels of cuts? Do you think it's all pre-agreed?
I think you should definitely go, Manus. But I don't think anything is agreed yet. An advisory committee recommended, an OPEC advisory committee recommended that the group implement a cut of 1.3 million barrels a day of production. But the ministers may or may not, they don't always go with a recommendation. So we'll really just have to wait and see what they decide, and if they implement cuts, when they would start and by how much. Those are the questions.
OK, I'll take the advice there. Now, look, Alberta, Canada, they've ordered something that I think is pretty meteoric. The first cut since the 1980s in terms of production. I know they're trying to salvage their own price versus the United States of America in terms of crude. But this could be the beginning of something really quite monumental, I think, for the North American story. What do you reckon?
I mean, it is pretty interesting, to have these cuts sort of come down from the government. I mean, some of the producers, the Canadian producers, have been calling for this and asking for this for a while. So there's not a huge surprise there. And then some of them, had already cut back on production. So there's not a huge surprise that they wanted it. But I think coming from the government, it's pretty interesting. Clearly, the biggest issue here is the Canadian crude, the heavy crude is sold at a much cheaper price than benchmarks like WTI and Brent. Western Canada Select was trading at around $21 a barrel last month. So clearly they're trying to boost that price, and they think by cutting back production, they can get that price a little bit higher, a little bit closer to WTI.
OK, let's see what comes of Thursday and Friday in Vienna. I am looking forward to it. That's the secret. Our Asia Energy editor, Aaron Clark, can't wait to run with a cameraman in a small corridor, frozen, for the OPEC meeting on Thursday. Let's bring in my guest. He knows better than I do about what's going on with the oil market. It is Akbar Khan, Senior Director for Asset Management at Al Rayan Investment in Doha. Great to have you with me this morning, Akbar. As we go to Vienna, we have this backdrop of a deal almost done in principle. I look at supply, it's in the GTV library, and they are pumping it up in terms of volume. They are pumping at record levels as we go to Vienna. This is critical to do a cut, isn't it?
Good morning, Manus. Well, the markets clearly were enthused by the Putin MBS meetings in Buenos Aires, and I think everyone's willing them on to do that. A 30% fall in the Brent price in the last 2 months certainly focuses the attention. So OPEC hopes are high that OPEC will deliver to what the markets are wanting.
Yes, and in terms of the pragmatism, it's interesting to see, obviously, Mohammed bin Salman, if the Russians and the Saudis have agreed in principle to move forward with cuts. This shows a show of strength, I would say, by Mohammed bin Salman in terms of pushing back against Trump, given where we are with the Khashoggi affair.
Well, balancing budgets is clearly front and center. Everyone has their domestic priorities. All the leaders have them. And for the Gulf countries, clearly the price of their primary export is very important. They have all the Gulf countries have large spending plans ahead, and they need to be financed. And low oil prices aren't very helpful in that environment.
Let's take it to the world of equities. You say that the rally that we've had in oil prices has done very little. That correlation between oil and stocks is not as strong as some people might think.
Well, it hasn't been. As I mentioned, in the last couple of months, we've had it was a slightly more than 30% fall after the rally that we've had overnight. It's slightly less than a 30% fall in Brent crude, and yet the Gulf region's equity markets are largely unchanged. Dubai is the worst performing, at down 6% over that period. The Qatar market is actually up 6% over the period. So for such a large fall in oil price, these moves are very muted. Similarly, the bond markets and the fixed income markets haven't really seen much of an impact. Spreads haven't widened much, particularly in some of the more sensitive sovereigns, where, like Bahrain, for example, where the price of oil is far more relevant because there's worry of new issuance. Spreads have widened very, very slightly. So clearly markets were pricing in the drop in oil as a blip, as a correction, which would be where there would be a bounce, rather than pricing it in as a new normal. So clearly the move today is helpful, but this dislocation can't carry on indefinitely.
Akbar, one of the biggest dislocations, which is very, very manifest, is Dubai equities relative to the GCC peers, relative to Saudi Arabia, Qatar, and Abu Dhabi. You would say it was the foreigner flow that has dominated the outcomes. 2019. I suppose really what I want to know is, has Dubai hit a bottom? Has our market domestically bottomed out relative to the country peers?
Well, it's a good point. It's a good question. We've had 2018 has again been shaped by foreign inflows or outflows into various markets in the region. Dubai's been one of the key markets where you've had net foreign selling. There's been overall for the region, there's been probably $5.5 or $6 billion of net foreign buying year to date, which is very significant, and that's focused. The buying is really focused on Saudi Arabia and in Qatar. So Dubai's been struggling as the foreign investors, both passive and active, have been reducing exposure. Active investors have, for the last few years, have been very, very overweight Dubai, and given the difficult economic environment for the real economy across the region, and Dubai being no exception, it was a reallocation that was not difficult for many foreign investors to do. So Dubai equities have been suffering from a continued reallocation from investors who are trying to reduce their overweights there to perhaps move to Kuwait, to Saudi, to Qatar. As for 2019, we will see further index. We will start to see index outflows from UAE and Qatar, and to some extent Kuwait, because of the inclusion of Saudi Arabia in the FTSE and MSCI emerging market indices. So on the margin, there will be net selling, at least by index-related outflows.
Okay, Akbar, let's see what 2019 holds for us all in the region. That is Akbar Khan. Joining me there with the very latest, Senior Director for Asset Management at Al Rayyan Investment, on the line from Doha. Now, up next, SoftBank's telco unit IPO will make history in Japan as it debuts without a price range. We'll have the very latest on the detail from Tokyo. This is Bloomberg. SoftBank is to make history with a $21 billion IPO. Its wireless unit, it's set to be the first to debut in Tokyo without a price range. Brave or foolish? We've got our tech reporter, Pavel Alpayev. He joins us now. He covers SoftBank. He joins us. Pavel, I know that we're not allowed opinions, so I won't ask you for yours. But what does it say about this IPO in terms of listing without a price? I mean, it's a brave move, you've got to say.
Well, it certainly reads as a sign of confidence on behalf of both SoftBank and its underwriters that they could move 1.6 billion shares at a specific price. Now, as you said yourself, there's been no other example of a company going public on the Tokyo Stock Exchange without a price range, and there might be another reason for it. Another thing that's unusual about this listing is that the vast majority of shares will be sold to retail investors, the regular individuals. And there's some speculation that perhaps a lot of these people are not familiar with the listing process and might be spooked by the changes in the price as the book building goes on. So you could sort of imagine that SoftBank would want to send a clear signal on the pricing, and then when the final price is decided on December 10th, it might as well stay at 1,500 yen. Now, of course, the listing itself is on December 19th.
Okay, and is SoftBank's confidence justified? Do you think there is sufficient confidence? I suppose that this wave of good news that we've got in the marketplace at the moment is certainly going to help anybody's IPO at the moment in terms of trade and in terms of tech. But what are the prospects in the Japan telco industry? Because that's what's key.
Right. It's a tremendously profitable business where the vast majority of investments in infrastructure have already been amortized. But there are a couple of sort of concerns on the horizon. And the more immediate one is that the telcos, including SoftBank, KDDI, and Docomo, the three big wireless operators, have come under quite a bit of pressure from the government to cut rates. Cabinet officers simply came out and said the bills are way too high. And in fact, Docomo has already followed suit and saying that they will cut their bills by about 40%. It's not clear whether KDDI and SoftBank will comply as well, but you could sort of see some downward pressure on the profits. More midterm is the entry of e-commerce giant Rakuten that's due to join as the fourth wireless operator in 2019, and you could expect that they probably will come in with a bang with some sort of an unlimited data plan or some other way to steal customers from the three other carriers with some sort of a price war.
Okay, Pavel, thank you very much. Let's see what this perhaps brave move brings to us in terms of pricing. Pavel Alpayev there joining us from Tokyo. The US financial markets will close on Wednesday for a national day of mourning to honor the former President George H.W. Bush. They will also observe a moment of silence later today. Bush will be remembered here in the Middle East, in particular, as the president who assembled the multinational coalition that liberated Kuwait from an Iraqi invasion. Here now, we take a look back at his life.
He was known as Poppy and later 41, but George H.W. Bush rose to the pinnacle of power, drawing on his family name to cement one of the most successful political dynasties in American history. Despite his New England upbringing of comfort and privilege, Bush's parents instilled basic values, a dose of modesty from his mother and from his father, who was U.S. Senator, a great sense of public service. That commitment to serve intensified after the bombing of Pearl Harbor. Bush enlisted in the U.S. Navy on his 18th birthday and became the youngest pilot in the naval service. He would eventually be awarded the Distinguished Flying Cross for bravery in action after his plane was shot down over the Pacific in 1944. His dramatic rescue by a U.S. sub was captured on film. Following the war, Bush attended Yale, where he famously captained the baseball team and joined the secretive Skull and Bones Society. Over the next several years, he cultivated family connections to create a lucrative business in the oil industry. His attention turned to politics by the early 60s. Bush won 2 terms in the House of Representatives before a dizzying series of presidential appointments saw him serve as top diplomat at the UN, chair of the RNC during the Watergate scandal, liaison to China, and eventually director of the CIA.
I am a candidate for President of the United States.
Bush kicked off his first presidential campaign in 1979, mocking Republican frontrunner Ronald Reagan's voodoo economics before bowing out of the race. The snub didn't stop Reagan from inviting him on his ticket. The pair won the election, heralding an era of conservative values and limited government. As vice president, Bush worked to gain the trust of Reagan's inner circle, who viewed him as too moderate and elitist. He did earn respect for his calm and deference in the chaos surrounding the assassination attempt on Reagan in 1981.
The vice president refused to land on the South Lawn.
His declaration that only the president lands on the South Lawn has been called one of his finest moments as VP. During Reagan's second term, Bush distanced himself from the Iran-Contra scandal, claiming he'd been kept out of the loop at the White House, but suspicions that he knew more lingered for years. Bush announced his second bid for the presidency in October 1987. The same week, Newsweek magazine branded him a wimp.
For an endless, enduring dream and 1,000 points of light. This is my mission, and I will complete it.
But his powerful acceptance speech at the Republican National Convention.
Read my lips. No new taxes.
Gave him a bounce he would capitalize on to defeat Democrat Michael Dukakis and become America's 41st president.
I, George Herbert Walker Bush, do solemnly swear.
President Bush vowed to shape a kinder, gentler nation, focusing much of his energy on international affairs. From his muted response to the Tiananmen Square massacre to the decisive military action in Panama, Bush's approach was characteristically conservative and pragmatic. His refusal to gloat over the collapse of communism was later viewed as a masterful move.
Have no choice but to drive Saddam from Kuwait by force. We will not fail.
The Persian Gulf War was short and decisive. Despite the backlash for leaving Iraqi President Saddam Hussein in power, saving Kuwait was viewed as the high point of Bush's term in office, lifting his approval rating to 90% in public polls. But foreign policy successes were not enough for him to win re-election in 1992. His defeat by Bill Clinton ultimately came down to a single issue, distilled by the Dems' unofficial campaign slogan.
It's the economy, stupid.
In the years since that stinging loss, Bush and Clinton formed an unlikely close friendship, teaming up to raise funds for victims of the Southeast Asian tsunami and Hurricane Katrina. Although no longer able to use his legs, Bush marked his 90th birthday with a parachute jump from a mile up in what had become something of a birthday ritual.
That was the President of the United States, Mr. Bush. Now, South African Finance Minister Tito Mboweni says he's prioritizing better credit rating as part of his plans to revive a stagnant economy. He also weighed in on the G20 communique and the future of the WTO trading system in an exclusive interview with Bloomberg's Eric Schatzker in Buenos Aires.
It ranks as a priority. It's a priority number one and priority number one because we have to get out of the status that we're in, which I'm not even able to pronounce, back to a proper investment grading. And we're working hard at this. The change will not happen because we simply want it to be the case. The change will happen because of the things that we need to do.
What do you
ourselves.
need to do? What do you need to do to recover that investment grade credit rating?
One, we need to establish policy certainty and credibility. Secondly, we need to demonstrate action around state-owned enterprises. Thirdly, we need to demonstrate action around the fiscal stance. You know, the budget standpoint of South Africa. We need to show action that we are taking steps to reduce the debt that's accumulating. We need to take serious steps to show that we are moving to restructuring the economy and igniting growth. And when we do these practical things, I think the ratings agencies will look at us and say, these folks are back in business.
You were involved in the negotiations toward the communique. Can you tell me, over the past couple of days, what were the stumbling blocks?
Well, I wasn't involved, but the staff were.
Yes, sure, your delegation.
And I think the I think one of the interesting areas for conversation has been the trade issues. All of us want to reinforce the multilateral system of trade, rules-based, clear, no arbitrariness. And I think at the end, the communique really captures the essence of the conversations very well. And I think that's good for the global economy.
When you say...
Because the age of protectionism is really over. Most of us now have open and integrated economies and would like that spirit of openness to go through the G20 system and indeed to go through the global trading system.
That was the South African Finance Minister Tito Mboweni speaking with Bloomberg's Eric Schatzker in Buenos Aires. Or to coin a phrase from Bloomberg Opinion, oh, what a circus, oh, what a song. This is what it's done for these markets. We are rallying on the equities in Asia. Tech is in focus. Look at that Brent March higher. We will debate on Daybreak Europe. That's next.